All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Happy Friday to you all. Guys, I am sorry if you are in the Telegram. I have not been active this morning. It was involved in a car accident. Everyone's okay. Everything's fine. Just some vehicle damage. But man, I just got a chance to look at the charts like an hour ago, and we are dumping pretty big. We're dumping, and it really does look like, yesterday the higher probability was that we were in a double 1-2 impulse. It looked perfect. Our primary 1-2 was larger than our secondary 1-2. We got that impulse with an increase in volume to the upside. For me, there was a high probability that we did continue up. But I also did say we have a caveat we need to be aware of, that it was a news-based pump. And sometimes these news-based pumps are bull traps, and it looks like that's ended up what happening. We ended up dumping. We ended up not holding that 382, that 0.5 Fibonacci, and we even came down and took out the lows from Wednesday. We are seeing a pretty nice SFP of the lows on Wednesday. And I did some zooming out, and I wanted to look at Bitcoin overall. Let me go ahead and hide this channel real quick, but I do want to talk about this parallel channel that I just put on the chart, because overall, we are at a very macro resistance on the charts. We know that it's a major pitchfork midline. It's a couple of different pitchforks, major pitchfork midline, major pitchfork lower band here. It was a major resistance where I was expecting at least some sort of range to form. Now, our last range on Bitcoin was kind of in this zone here. We had a range forming, and it looked like that could have been the top. We bounced from 74.9K, which was a value area low of that range, and we were able to make one more move up. Now we are establishing a new range. Pretty much from the highs of the prior range, we are now establishing a new zone, a range, which I did say is at these major resistances, it is likely to form ranges, because you're not going to generally see a straight up move into it and then a straight collapse. Generally what happens is we form a range at the top. You could call it distribution or reaccumulation if we're going to continue higher, but a range forms, and it allows some of the bigger players to offload their profits from, down in prior ranges. If they were accumulating down in these prior ranges, it allows them to offload. And then also it allows them to build shorts if they're looking for short positions. So a range here is to be expected, and we are starting to form that range now. But now what we want to do is we want to focus on what's happening up here. We want to focus on, is this a corrective structure? Is this a corrective structure that's going to break down? Is this a corrective structure that's going to break up? Or is this starting to form a distribution range that is really going to break down and dump us to much more aggressive lower targets? So I was just looking at it, and I'm going to go back to the Coinbase chart here, looking at this range that's forming at our important pitchfork resistances. And guys, these are high time frame pitchforks that are often respected, like very well respected. So, and we also know that it was our 1-to-1 trend-based Fibonacci extinction, and it was our golden pocket, our proper logarithmic golden pocket. Now, when we zoom in and we look at this range, this from the $82,800 highs, first off, we did hit the 886 on a weekend, and that 886 tap and that weekend high still hasn't been taken out. I really did think yesterday we were going to come take it out and potentially make new highs yesterday, but that obviously has now been a confirmed corrective move, bull trap corrective move, and then we're dumping here. We're going in through the weekend, so I do believe that this range is going to continue. And looking at this range, we can look at a parallel channel within this range. And let me go ahead and hide our pitchfork just to get it out of the way for a second. And it does look pretty nice as far as it's a slight sideways and down range, but it's a sideways range. We did have not the best confirmations for bull divs at the top at $82,800. We didn't have 4-hour bear divs. We didn't have 8-hour bear divs. I believe we didn't. Yeah, not really any 8-hour bear divs. No 8-hour bear divs in here. And so is this a macro top? It is very hard to say, and I think that the way we are grinding sideways like this in this corrective structure, there is a real possibility that we could come up and make one more high here before ultimately seeing this range break to the downside, if it is going to break to the downside. We are grabbing some key liquidity, and we are still inside of the channel. We are holding inside of the channel, but I do think that as far as the range goes, we do have some lower targets to be expected. I do think Bitcoin is going to continue grinding sideways and down within this range, especially over the weekend. We know the weekends are very low volatility, low volume, and we might even get kind of a flash crash, a flash like shoot down into some bigger support levels before reestablishing back inside of that range and continuing that range. If we pull the volume profile and we look at this range from our volume profile, I'm actually just going to pull it pretty much as soon as we entered inside of that channel. Let's actually put it right there. We are below the value area low of the range. And that is a sign of weakness for Bitcoin, that we're below the value area low. So what we need to be watching for is we really need to be watching, and I'm actually going to pull it to right here. We need to be watching for the back test of the value area low. Because if we come up, which is going to be around $79,800, a little bit under $79,800, but if we come up here and we reject from this area, I would expect to continue making new local lows on the chart and continuing the local downtrend. We could see this downtrend continue throughout the weekend, and then come Monday, we could be bouncing from a nicer support level below us and making a move up towards the middle to the top of the range. But over the next couple of weeks, I would not be surprised if we range in this zone for a couple weeks, guys. And we do see, I am still overall macro time frame bias for me is that we still are bearish. Like, I think we are going to put in a new low below 60K. Could we make a new local high, maybe coming up to 83.5 or even 86, 87? I still do think that is possible. If we are going to make a new high, like up to 86, 87, we do not really want to dump super low here. We do not want to dump to like super low levels. So I was looking at some support levels. We've obviously talked about some support levels below us throughout the week here, throughout this past week. And we do have some nice, this green box here. We have liquidity. We have our anchored VWAP from the lows. Your value area high is just above it of this range that we broke out of. But I was looking on the Bybit chart this morning, and I was looking at, okay, we have a couple other pitchforks. I have a few different pitchforks that I look at, and this pitchfork here is a very highly respected pitchfork from the COVID lows, I believe it is. Yeah, COVID lows up to our 69K highs down to your bear market lows. You can see we're just kind of chopping around inside that pitchfork band, which is very normal to chop inside those pitchfork bands on high time frame pitchforks. You can also see that we flipped that pitchfork band to support, and we could now see a bigger dump down to hold it as support again. And if we do hold it as support, we might be able to come up and make that new high. And that support there is also going to be where that anchored VWAP is. It's also going to be right around that low, or that 786 Fibonacci. If we pull a Fibonacci retracement from the 74.9K lows up to our 82.8 highs, we put on that 786. You can see our 786. I guess 786 is a little bit higher. It's a zone for me. And then, of course, on Bybit, we do know that Bybit had this big flash crash that no other exchange had. Let me zoom in on lower time frames so you guys can get a look at this. This flash crash that was on Bybit. Generally, when one of the major exchanges has a kind of rogue wick like this, a rogue price action that happens, we do tend to have the other exchanges come fill it as well, come down to that price action as well. It's almost like a magnet of sorts. So you can see we would have that right into our anchored VWAP, right into our pitchfork, and our 786 is close by. And it is also going to be, let me get to the index chart here. On the index chart, you can see that same 786, we also have a naked weekly point of control in there. We have the naked weekly point of control. And more importantly, if we zoom out onto the daily time frame again, and we pull a Fibonacci retracement from the 65K lows up to our 82.8K highs, you can see that's this Fibonacci. Our 382 Fibonacci is right in that zone. It is also this bigger parallel channel, and this bigger parallel channel was pulled from the 60K lows to your 65K higher lows up to your very, very first dead cat corrective bounce high. And this channel has been nicely respected. We are rejecting from the top of the channel. And if we see this kind of slow corrective bleed down inside of that smaller parallel channel in here, we could see us continue to bleed down to about that midline zone, or about, you know, this 786, if it, depending on how long it takes, it could be at golden pocket. If we take a little bit longer, maybe another 2 weeks or so, golden pocket's also going to be around that midline. And that might give us that kind of slow corrective ranging structure, bounce from there, and then we could make that one more new high before ultimately seeing this channel break down. What I will say here is, when we see on the bear markets, in these bear markets that we are in, when we see these kind of corrective channels like this, they often do break down. You see a channel form. I mean, like if we pull a channel here, you can see that we have the channel. This time we didn't make it up to the top here, but you generally break down, and you see also how when you break down, you backtest locally, you make a new local low. You backtest again, and on that second backtest is when you usually see that big crash on the higher time frame, not the immediate backtest, but usually the higher time frame. And it's a real possibility that this is a repeat of that kind of bear market cycle, where we have a bigger channel, corrective channel structure. And if we start to lose the midline, we could drop easily down to the bottom of the channel. And if we lose the bottom of the channel, that is when I would expect new lows to be coming in on the bear market. Let me say hi to everyone in the chat. Happy Friday to everyone. Hope all is doing well. Samuel S44, thank you so much, man. We are doing good here, so appreciate that. Appreciate you being in here, and appreciate you modding. Lil Rich 69, what's up, man? Falco's Forge, good to see you in here. R Pink, much love to you. Thank you for being here. Thank you for modding, and thank you for doing an awesome job as always. Same with you, Samuel. I appreciate my mods so much. You guys are awesome. And yes, please do hit the like button, guys. If you get any sort of insight into the market from this live stream, or if you just enjoy the live stream at all, please hit the like button for me. I know in the past couple of weeks, and specifically the last week, we've been going through some altcoin opportunities a lot. And I still do want to cover the opportunities on altcoins, because we are seeing Ondo and ZEC see the pullbacks, but these pullbacks to me are still looking corrective. And it looks like we still might be able to get that impulse to the upside that looks like they're incomplete. So I'll cover some of those. I want to cover Solana. I want to cover Ethereum. And then we can also go into our USDT dominance chart. Our USDT dominance chart, we were looking for a major bounce, guys, at this zone. I've been talking about this zone of the 382, the naked weekly point of control, and the daily. And once again, we talk about channels, and channels are very common in crypto because we have a lot of bot trading. But this channel here on the USDT chart looks like a corrective channel. And this is one of the major support zones where we could break out of this channel and see a new high put in on USDT dominance, which means that that inversely correlates to Bitcoin, and Bitcoin would be putting in that big dump potentially to lose its ascending channel, and we would see Bitcoin see that crash. That is possible. Now, the big thing with USDT dominance is we did see a little bit of wickage and a little bit of a range form at this support level here, the 382, the naked weekly, the daily, and it's also your channel midline, chopping around this channel midline. If we zoom in here on USDT dominance, you can see we actually were able to break back above. We had a little bit of deviation below the midline. We were able to break back above it, back test it perfectly, and now we are seeing a decent move up from that midline. So we could see us continue at the very least up to the top of the channel, where we would see maybe a possible another rejection and then a drop, and that would be meaning Bitcoin would be able to make one more high. So, but USDT dominance chart very nicely helps us support our thesis on Bitcoin to kind of get an overall bias on the macro time frame on Bitcoin, because Bitcoin we know is at a major resistance level, and we know that USDT dominance is also at a major support level. So when we see that confluence, we can have a little bit better of a view on if Bitcoin is about to see the bigger dump or not. And same with the altcoins. The big thing is we know that on the USDT dominance chart, we're looking for this, all of this corrective structure is a wave 4. And we're looking for this wave 4 bounce to create one more new high on the USDT chart, which could be the end of the bear market. In my opinion, that's kind of my general viewing on the USDT dominance chart, is that the next high will be the end of the bear market. And I do believe we are probably going to take out that 9.5-ish%, those dual highs that are in there that are super, super important. You can also see for our wave 4 targets, the common zones to bounce are between the 382 and the 0.5. Now that 0.5 Fibonacci is going to be very, very important because it is near the bottom of our channel. Near the bottom of our channel. It's also near the bottom of our macro range. If we zoom out here and we look at this big macro range that we've been in really since 2022. So this range here is pretty much the bull market for Bitcoin this cycle. And with this range, we're looking at that impulse up here, 1, 2, 3, 4, 5. We're looking at this big impulse up to the upside. The 0.5 is a common target. And also, we have not really backtested the breakout of this lower range here. This was accumulation in some ways for USDT. And now we are starting to see that expansion phase here. If expansion is going to continue, what you will often see after you break out of the value area high of the range, you will see a rejection from resistance, and then you will have a corrective move down to backtest that value area high. And depending on what happens on that backtest of the value area high, if you backtest it, you kind of make a little dead cat bounce and you fall back inside, it doesn't look good. And we could see USDT dominance crash extremely a lot more. And that means Bitcoin would probably be pushing up into, the 90s or higher. But to me, it's unlikely. To me, this looks like a very corrective range. If we turn on our volume is it's actually not the best looking for correction. You generally want to see volume getting lower and lower and lower. And we did, by the way, guys, at the end of a correction, you do generally get a spike in volume. And you can see we get this spike in volume upon finally hitting into this 382. So that means that this corrective move could be done and we're about to blast up here. That is a little bit concerning if you are a bull for the crypto market. But as a trader, we have to keep both possibilities in mind. So could we see something like this, a rejection, and then another low coming in where this, honestly, this is a huge, huge support for USDT dominance. And if we do bounce here and get that push to the upside, that is when Bitcoin could really see an aggressive crash. Now, if we get down here, I suspect Bitcoin will probably be around $86,000 to $87,000. It would be testing the macro value area low of our prior range, this upper range here of 2025. So, and you can see how, let me go ahead and hide this for a second. I will pull that range in here, and you can see how that value area low there, it's about, and I'm just going to take a rough estimate here. We're here. It's about 8% higher, right? And if we go to the USDT dominance chart and we look at how far away we are from that support level, I guess a little bit farther, 8, 10%, 13%, but it's about the same, right? It's about the same. So if we're going to see Bitcoin pump up to 86, 87, that means that this USDT dominance chart is going to be coming down to this area. And the reason why I think the bear market low is not in is because when you see this correlation like this, we know that Bitcoin will see these moves up and then reject, moves up, reject, and then the macro low doesn't look like the best macro low. But we also know with USDT dominance that it's breaking out of a range, and it was an accumulation range that lasted over 2 years, and then we're expanding. So you often see those back tests on those expansion breakouts of accumulation. We had all this was accumulation, 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 expansion, back test, higher. We also have, I know that USDT dominance is not liquidity per se because it's not a tradable asset like Bitcoin, but it's still the psychology. These liquidity levels still do work, like SFPs still do work on Bitcoin dominance and USDT dominance. Okay, let me keep going in the chat. Archie TV, what's up, man? Welcome in. Eric, much love to you. Omar, it's good to see you in here. Christoffel, why did you have a car accident? It was their fault. It was not my fault at all. So I was sideswiped in the back of my truck towards the back tire and everything. So, and everything's okay. Yeah, it wasn't that bad, but not my fault. And insurance obviously is going to be taking care of it, everything like that. My daughter was a little shaken up, which is always crappy to see. But yeah, it's part of life, guys. Part of life. These things happen. I have another car, so I'm not worried about that. And it's just a big inconvenience, right? Renee, what's up, man? Good to see you in here. Crypto Clan World, much love to you. And Brent Adams, C Train, thank you guys for being here. Crypto Wanderer 5813. Thank you for the comment, man. I appreciate it. Not quicker. Dang son, glad you guys are good. Yeah, thank you. Glad you guys are good. Thank you, not quicker. I really appreciate that. And yes, Wiggly Warm Crypto, it's good to see you in here. It's been a while, man. We are at 4K subs now, and I appreciate it. It's all of you guys. It's all of the support in the community we're building, and I think we are building a pretty good community in here. And I know we do have some really good traders and some really good minds in the Telegram. I'm really happy about that, and I continue to want to plan to build this more and more. And I think we have a community that is all there to support each other. All right. Yeah, thank you guys for also your concern and your comments and everything like that. Nonsense, welcome in. Time Attack, much love to you, man. Thank you for being here and thank you for modding for me. John, Boomdock Sate, afternoon to you as well. Rajna, welcome in. Rajna J. Sang. God bless you as well, man. C. Dingle. Guys, everybody, thank you all so much. Fat Sonic, thank you guys. Okay, so, and Jesus Save 77, thank you for the support in the Telegram, man, and the blessings and the prayers. I appreciate that more than you know. And yes, we are okay, and thank you for having concern there. Okay, guys, so let's go. We can go through some of the altcoins too, because I do think now with Bitcoin, we're probably going to continue to range within this range, and we grinding down, making new local lows, right? As far as our local support levels go, I am looking at coming down to the golden pocket of this move from 74.9 up to 82.8. That golden pocket's going to be important because overall our market structure is still bullish, right? And with a bullish market structure, golden pocket 786. So it's a general area, right? Golden pocket 786 is a general zone where you do see those bounces. And the grind down in that corrective channel structure, if we throw that channel back on, it would be actually not surprising at all if we can continue to grind down, and even for like another week, right? We could see a move up to the top of the channel first, another move to the midline first. But I would be suspecting that we might continue to grind until we hit this golden pocket area at the very least. And you can see that all of this liquidity that built up in here, we do have all that liquidity that would be flushed out into this golden pocket. And then, of course, the 786, I actually like the 786 a little bit better because it does have that naked weekly point of control. If I turn on that naked weekly point of control, you can see that naked weekly point of control is down there. That's also where your channel midline is going to be. So, and then the next big support is this. And guys, as traders, we don't have to know where Bitcoin is going to go. We mark out the levels of confluence. We mark out our levels of interest, and we wait for the market to come to us. We wait for the market to, we set traps in some ways, right? And if we see confirmation, once we get there, then we execute the trade. If we don't see the confirmation, we don't execute the trade. Last night, actually, as we were coming down to that 382, I posted in Telegram for you guys. We were coming down to that 382. I really didn't like what I was seeing there. We didn't see any bull divs really at that 382 retracement as we were coming down and first hitting it. And we also had a front run of that 382. Oh, what just happened? There we go. We also had a front run of that 382 earlier in the night. So when we came down, we wicked down through it. And of course, you just come up to VWAP, you reject from VWAP. And guys, VWAP is really important. If you guys are day traders and you don't use the VWAP, like, it's a very good tool for you because the VWAP usually is kind of giving you your bias for your intraday trend. And once you start to lose the VWAP, it acts as resistance. You reject from the VWAP, you expect to take out this low, and then you do. And then you come back up. If you reject again, you expect to take out this low. Sure, could it chop sideways for a little bit? Yes, but you expect to take out that low. And now we do. And so as long as, and we could come up to VWAP right now. The VWAP right now is going to be around the value area low of this range. If we put this range on again and we look at it, the value area low is going to be right around the VWAP. And so if we come up, and this, by the way, this guys looks like a kind of corrective channel in here. If we come up, reject, you expect to make a new local low. Actually, I want to check right now because what I'm looking for right now, guys, is a 3-wave corrective move up there. So we can actually be looking at our local golden pocket, very, very local, like what's happened today at this golden pocket zone, 78.9-ish, 78.950-ish. If we bounce from here, we might be able to even catch a scalp long opportunity up to that value area low. Very nice risk to reward scalp there. It would also very nicely, actually I meant to go lower, 5-minute. It would take out all these internal liquidity levels through like an internal sweep. Okay, Mind Tapestry, welcome in. Good to see you. Yeah, thank you so much for your kind words. Blessings to you as well, and much love back to you as well. I appreciate all of you guys so much. You know, I feel like we have such good people in these live streams and such good good hearts in here. So thank you guys. We'll go through some of the altcoins. Let me know, guys, if you have a specific altcoin. But right now, I want to go through Ondo and I want to go through ZEC because we talked about some possible long opportunities on Ondo and ZEC yesterday. And I'm going to zoom out on the 2-hour. Now, yesterday, we were in this area with the 382. We were bouncing, we were reclaiming the 382, and we were starting this potential impulse to the upside. But after, now we know it's a confirmed 3-wave move. As soon as we start to hit the golden pocket of your wave 3, you know that most likely you're in a 3-wave corrective move that's finished. So you pull your golden pocket from the lows of wave 3 to the highs of wave 3 as soon as you hit that golden pocket right there. And we did get a small little reaction, but as soon as you hit that, even if you make a small bounce, you're likely to make a lower high and then continue down to take out that low. I also talked about how we were chopping sideways and down in this descending channel. And we did reject, by the way, straight from our 0.5 Fibonacci. We took the liquidity. This resistance here, if Mark is in here, I don't think Mark's in here right now, but me and Mark was the one who turned me on to Ondo. And I remember telling Mark about a week before it happened, like, let's watch this level. This is a super, super important resistance where we could get a major rejection. And I'm still short, by the way, guys. I'm still short on Ondo. It was one of the rare times I set a limit order exactly at the 0.5 Fibonacci. And then I added to it a little bit as well. So my average entry, I think it's like 45.83 now or something like that. But the targets, I took some profit at the 382. Actually, it was the 1-to-1, which is pretty much right at the 382. That 1-to-1 trend-based Fibonacci extinction. I told you guys that yesterday, 3792. And you can see we're also bouncing from the 1.236. But I do think we could come a little bit lower to hit that 0.5 Fibonacci. And what I'm looking at is the impulse up, right? From this low, because we had a 3-wave corrective move here. We had kind of the triangle building in here. From that low, you can see very clearly a 1, 2, 3. And now if we come down and bounce from either of these zones, 4, 5, we could make a new high. The macro time frame bias on Ondo, I am still bearish that we're going to take out the lows at 20 cents. Let's zoom out to the weekly time frame. So what I'm looking at here, and I'm sorry for this mess here, guys. Just please try to disregard this mess, but we'll pay attention to the candles. From the highs, we're looking at an impulse down in a wave 1, kind of that flat correction in a wave 2. We got our big wave 3 to the downside. So now what we're looking for is that overall 3-wave corrective move in a wave 4 before seeing another impulse down in a wave 5, and it would take out this low and this low together, grabbing liquidity. So if, you know, under 19.6, I think would be a really, really good swing long opportunity for Ondo. Like, especially if we have weekly bull divs as we're coming down there. If we're coming down there, we see these weekly bull divs. That would be a spot buy opportunity and a swing long opportunity for me. But on Ondo, we're looking at this last move here as an ABC, right? And so in an ABC, an A wave is an impulse, the B wave is a corrective move, the C wave is an impulse. Your common targets to end that are between the 0.382 and the 0.5. I don't have the 0.382 on the chart, and actually I'm gonna try to clean this up just a little bit for you guys here. Weekly was hit, so I can get rid of that weekly. The daily was hit, so I can get rid of that daily. But that was our zone. That was our box. We had a weekly, a daily, our 1.618 trend-based Fibonacci extinction, and we had the liquidity and our 0.5 Fibonacci. So if we pull that 0.5 Fibonacci from the highs to the lows, and we turn on that 0.5, and I do want to make it on log scale because that's more than a 30% drop to the downside, that is where we hit into that 0.5 Fibonacci, and actually get it to there. That's exactly where we rejected from, to pretty much to the exact cent. That could be the end of this corrective move. But why am I saying then I'm looking for longs? Because in your last move up, this is an impulse, and it's not complete yet. This impulse in here is not complete. So now when we zoom in back to the daily time frame, we're looking for that impulse to be complete. We can see here a 1, 2. Here's your big 3. We need now a 4 and a 5 to finish that impulse. As long as we don't hit the golden pocket at 59 cents, our macro overall thesis that this is just a wave 4 correction before taking out 19.6 is still intact. As long as we don't hit the golden pocket at 59.6. So could we start to see a bounce in the next days to a week from that Fibonacci target between the 382 and the 0.5 Fibonacci, and then see that big move to the upside? Wave 4 targets. And I've got to make sure that is on log scale. And also the way we're correcting, let me zoom in to the 4-hour time frame. The way we're correcting here, you can see as we're correcting sideways and down within this channel, volume is getting lower and lower and lower and lower. A sign of a corrective move. It's a sign that this is just a corrective move. We're dumping on low volume. We're pumping on high volume. So I really am still looking for those long opportunities on Ondo. What I'm looking for now locally, because we don't have bear divs, or excuse me, bull divs, and money flow looks pretty crappy, move up to the midline, which is also your VWAP. If we reject, I would look for a move down to the 0.5 or even a little bit below it to hit the bottom of the channel, and then get that. We would want to see a pretty strong bounce from there. We would also want to see some bull divs coming in. If we go to the 2-hour chart, it is setting up very, very nicely for this, guys. If you look here on the 2-hour chart, well, I guess maybe that was ZEC I was looking at. ZEC has very nice 2-hour bull divs. We don't really have 2-hour bull divs on Ondo. Regionally, we do here, but the money flow looks bad, so I would say we're still going to continue to grind slowly down. When we start to see those bull divs, 1 hour, 2 hour, possibly even 4 hour, and then of course on the 15-minute, you'd probably want to see multiple drives of bull div. That is when we can pull the trigger for looking for the long. And we also want to be at an actual support level. If we look at our naked daily and naked weekly points of control, okay, that one was tapped actually. Let's unfortunately that is pretty far down, and that would probably hit our golden pocket. We do not want to hit the golden pocket of our wave 3. Yeah, so we do have support there. This could still be a good long, but it would invalidate the impulse. If we continue to grind down to about 32 cents, 32 to 31 and 31.7, I would definitely still look for a long here, but based off a naked weekly and a golden pocket, but I wouldn't be looking for new highs. I would be looking for the move down, the bounce, and then I would take profit at the lower high golden pocket, but that still could be a very nice long opportunity there. We'll see as we develop within this. If we get down there, we can actually look at taking that trade. I'll set an alert. Let me just add this naked weekly. And then we'll set an alert there as well to see if we get that. So we could possibly take that trade in the future, guys, if that does play out. But I'm not expecting it. I'm actually expecting to bounce from the 0.5 Fibonacci, which is just a little bit below us. Okay, moving on real quick to ZEC. ZEC, I think, is looking, that is the one I was looking at that has really nice bull divs on the 2 hour, I believe it was. Yeah, so, I mean, check this out. Same thing with ZEC. We're grinding down within this descending channel. We're hitting the 382. We did see an SFP of Wednesday's lows, but we're still kind of just grinding sideways and down. Now, ZEC, I have a bigger pitchfork on it. And overall, I think this dump on the pitchfork is going to, or the pump could end around the pitchfork midline. Another thing with ZEC is we see that very nice 1, 2, 3, and we're looking for a 4 now, and then a 5 to come up and take out that high, potentially all the way up to this area. And our targets between the 0.382 and the 0.5 Fibonacci. We have that really nice pitchfork band that yes, we front ran it a little bit here, but it was acting as resistance, and now it's going to be acting as support. So if we continue to grind down here into this zone, and you could come a little bit lower to hit the 0.5, but that zone between about 495 and like 480 is going to be a very good opportunity to look for a long. Our current low, we have a golden pocket at 596. If we pull a golden pocket from the highs to the lows, you can see our golden pocket is right at a very, very key liquidity of the second pivot of this channel. And if we do break the channel to the upside, I would suspect that we're going to at least come up to that golden pocket, grab that liquidity. So that's going to be a TP for me and a possible scalp short, depending on what happens if we get up there before actually hitting this zone. Then I would look for maybe potentially a bigger corrective structure in here. And then to move up, because we're looking for, I guess it is already around the same amount of time as this corrective structure. Already kind of the same looking. We'll just have to see, guys. That's why as traders, we set alerts, we pay attention. We only take the trades if we have confirmation. But look at the confirmation that is building right now on ZEC. Lower low, lower low, lower low. Look at these bull divs forming. Money flow is finally starting to bottom out here. Now on NAMI, we did have multiple drives of bull div, but we've invalidated it with the crash that we saw today and overnight and today. So what I would want to see is I would want to see this kind of continuing to grind down, and then I would want to see another potential drive on Market Cipher, and then NAMI, with it being much quicker, we might see now another new form like this repeated over here. By then, hopefully our money flow is now nicely curving to the upside. But that is setting up very, very nicely for a long opportunity on ZEC with the bull divs that we're building here. Very nice bull divs. On the 4-hour chart, we are starting to build some bull divs here. But money flow is looking pretty weak. And we do know that money flow always overpowers a single drive of bull divs. So generally what we'll see on Market Cipher is one drive of momentum bull divs. The money flow will at least start bottoming out or curving to the upside. And we get multiple drives of bull div on NAMI, and then the money flow is usually crossing into the green, but it is setting up nicely. We're starting to see confirmations already there, so now we're just waiting for it to actually hit some support levels, and we are still at support. We're still at the 382, and we did get the liquidity grab. Very, very nice liquidity grab of Wednesday. I'm not in a long on here yet, guys. I'm not in a long. I didn't catch that. If you are in a long, by the way, I would just be aware that you could reject from that midline, that channel midline, or even come up a little bit higher and reject from the VWAP, but that's what I would really be watching for, is that kind of rejection. And then we could pull a range. We could pull a volume profile, and we can just look at this entire kind of upper range. The value area low, we're underneath it. So as long as you're underneath the value area low, you can expect weakness on this, maybe more local downside coming in. Mark, what's up, man? Welcome in, my friend. I was just talking to the guys here about me and you turning me on to Ondo and us just kind of nailing that trade on Ondo. So yeah, but thank you. All right, let's see. I wanted to go over Solana as well. Yesterday on Solana, guys. So this, by the way, I was looking for this exact rejection right here, right now, because we did front run the daily in the golden pocket. On Solana, we broke out of the value area high of our 3-month long range. You can see it was acting as resistance in here, got a small pullback, broke out with nice volume. When you break out, the only thing you're really looking for is volume and liquidity levels. We had a volume resistance here, a naked weekly point of control at 93.8. We did see a small reaction from it, but nothing much. And it was also some liquidity in here. So very nice possible rejection level. We got a small rejection. We go up to the main rejection level, right? And that main rejection level is the range highs. It is also our 1-to-1 trend-based Fibonacci extinction and our pitchfork band. So we reject there. We get the rejection, and we're dumping down. Yesterday, we saw that this looked kind of like a 3-wave corrective move, and we had the potential for an impulse, a 1, 2, 3, 4, 5, an impulse to come up. But now, with that kind of bull trap, a confirmed 3-wave move that we put in yesterday, and now we're kind of impulsing down here. This looks bad, guys, for Solana. 1, 2, 3, 4, 5, right? And we have now, we're finding reacceptance back inside the value area high. Yesterday was our opportunity, or the opportunity for the bulls to bounce here and to continue making new highs on the chart. Now that we are falling back inside the volume profile, we could backtest this as we are right now, reject, and come down and hit this golden pocket. Actually, let me check this out, guys. We're a little bit late here, but I was actually looking for a potential short here at this value area high. Looking for a short. Let me just do this right now. If we short, we put our stop above the highs and we target the golden pocket. Man, it's a little bit late. That's a 2.2 scalp short there. I think it's a high probability short to play out. Maybe in the stream, what we can see is if we get one more move up to actually hit the value area high, I would be interested in potentially taking that short. Where are we at here? Where is my, there we go. Because we front ran the daily level. It was just barely front ran. And also our golden pocket is coming in around 87.8 and down to 87.3. But I do think this could be a nice support level, at least for another bounce to backtest value area high. So if we're talking scalp opportunity, come down, hit golden pocket, you would have to long pretty much right away. If you long in here, let's say you long after you start bouncing, your stop goes below that wick, and even retargeting a higher time frame backtest to value area high, it still could be a 4 to 5 risk to reward ratio. And then I would leave some open just in case we break out and come up to higher levels here. Because this is an important support level. This is an important support level just below us. But now that we do kind of see this confirmed, or not a 5-wave move down, even if we bounce from this golden pocket, we have to watch for a 3-wave move up to golden pocket before a much larger dump coming in. And this is kind of what we were looking for on Bitcoin too. Bitcoin is coming up to key resistance. If we zoom out on Solana on the daily time frame, this is one of the things that I was worried about, guys, is the move up overall on the daily from that low at $77. It does look like a confirmed 3-wave move. And now if we fall back inside, there's the opportunity that we could keep falling much, much deeper here and even taking out the lows. Let me turn off the volume here. So, and where did we reject? We rejected exactly from that 1-to-1 trend-based Fibonacci extinction. That's your common target between the 1-to-1 and the 1.236. Grabbing liquidity of the range highs, rejecting from the pitchfork band. It just does not look very good that we are seeing this be an aggressive dump to the downside, because this is starting to get aggressive to the downside, it means it could be the start of an impulse. And that means that we could go wave 1, wave 2, wave 3 could bring us all the way down to take out this low, wave 4, wave 5, and our wave 5 could even bring us down to take out this low. Very similar to Bitcoin, guys. Bitcoin, you kind of have that corrective structure, and if we start to see a 1, 2, 3, 4, 5, you could be coming down in the next couple of months to take out 60K. Once again on Bitcoin, where did we reject, guys? I'm gonna let me just get rid of some of this local stuff here. We rejected at our 1-to-1 trend-based Fibonacci extinction. So it's not the best look. Yeah, Fat Sonic, I agree with you. I wouldn't be surprised if we see some violent red candles as well. We really need the bulls. If the bulls are going to continue this, you really don't want to see too much of more of an aggressive dump. We really do kind of want to see this prior range highs that was acting as resistance now hold as support. And it's that stair-stepping pattern. If you guys remember, a couple weeks ago, I started talking about this stair-stepping pattern. Oftentimes, you'll rise in a staircase and fall in an elevator, right? And so that's why shorts can be so awesome to take, though. But you can see here, kind of we have like the stair-stepping in here, pump to the upside. Stair-step here, pump to the upside. Stair-step here, pump to the upside. Stair-step here, pump to the upside. Now we're kind of creating another staircase here. We do not really want to see the big breakdown, a violent breakdown, because it's like the liquidity factor, right? Sweep lows, sweep lows, sweep lows, sweep, 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 sweep. You can sweep all this very, very aggressively. Okay, let me read the chat a little bit here. Yeah, 20 cents, I do think is an alert 100% as well, Fat Sonic. For me on Ondo, I don't know too much about like the protocol or how good the team is on Ondo, but it does have very nice price action, and it does have nice liquidity as well. Like when you look at the charts, it does have nice liquidity. It doesn't have a bunch of scam wicks and stuff like that. Mark probably knows a little bit more about Ondo, like what its use cases and stuff like that. But that double bottom at 19.6, man, oh man, if we have those and we're setting up for potential weekly bull divs, like that would be a super nice swing long and even possibly spot buy, in my opinion, for me. And of course, nothing here is financial advice. I do not give financial advice. I'm not a financial advisor. That shtick, you guys know. What's going on here? I want to look for that support coming in at the golden pocket. I will set an alert on this. So if we get that bounce from the golden pocket, because I want to see this 3-wave corrective move up to value area high. And if we get that rejection from value area high, we could even look for a short to take out the low of today. Looks like we could be setting up for some bull divs as well. Oop. Bull divs as well. Didn't we do that? All right. Thank you, Fat Sonic, for the comment about the charting. Montez D, welcome in. I have a question. You were looking for a retrace in a local downside? Why did you use log? It ain't more than 30% from the local high. I don't understand. Which are you talking about on Ondo for that log scale downside? With altcoins like that are high volatility, the log scale, even if it's not more than a 30% drop, when your overall structure, like the overall impulse is more than a 30% or 100% move to the upside, excuse me, So like on Ondo, I think that's what you're talking about, right? Montez D. Yeah, Ondo. Yep. Very next comment. I mean, this is a huge impulse to the upside. Even if we're actually looking at this structure here, this is a huge impulse to the upside. So even though it's not more than a 30% drop to the downside, and actually it's probably pretty close. Let's see here. We're at, yeah, 21, 22%. The thing is, this move up is 100%, more than 100%. So because of that, we want to use the log scale even on the retrace. You want to use the log fib even on the retrace for that. I hope that answers the question. Now, if you're not using the log scale, let's just go to our wave 4 targets. You can see that they're not really being respected as they were on the log scale. You busted straight through. You didn't have any respect really at the 382. But when we put that on the log scale, you can see that the 382 was respected. Yes, there was a little bit of a deviation below it, but you can see how it kind of held as support in here. Hey, how it shows that add text. Held as support in here. You lost it. You back tested it. So, when the overall impulse you're looking at is more than 100% or 30% to the downside, that's when you want to use log even on the retraces. But great question there, Montez D. It really shows that you understand what you're talking about with the log scale versus non-log scale. Did I catch the move on hype? No, I didn't catch the move on hype. And let me see what hype USD. Oh, wow. Yeah, I mean, hype was pumping pretty aggressive yesterday. We can look at this range. This isn't the chart I was using, though. Let me see if the USDT chart. There we go. Yeah. I mean, you're backtesting value area high right now. I don't like the wick into it, but it is trying to hold. I would be very, very cautious. Very, very cautious of rejecting from a lower high golden pocket or even rejecting from the VWAP and starting to fall back inside of this range. If you start to fall back inside of this range, I would expect to come down to value area low, taking out that like the liquidity into value area low. And even like, I know this is going to look a little bit unsymmetrical, but clearly this is impulsive structure to the upside in here. Can we count a valid impulse? So like wave 1, wave 2, another wave 1, another wave 2, and we have to say that because there's overlap between the highs and the lows here. You could say this is your wave 3, 4, 5, 4, 5, or you could even, you could probably say all of this is a wave 3. You get your 4, you get 4 5s in here. You get all these little 4 5s in here. They're not very symmetrical with your 1 2s. The other way I would say that you could count this, because wave 4 structures, wave 4 corrective structures are often bigger than wave 2 structures. 1 2 1 2. All of this is a 3. This was your 4 5 4 5, and it's done. We would have to look at, did we hit the golden pocket here? So we would pull our golden pocket from the lows to the highs. Golden pocket. Yeah, you even hit the non-log golden pocket there. So that would invalidate that. So never mind on that last double 1 2 impulse. But once again, you really just want to pay attention to that range, this range here. And if we can maintain above the value area high, you are going to expect to come up a little bit higher. The resistance just above us was not hit. Let's make sure on that, actually, with that naked weekly point of control. Let's see if that naked weekly. No, see how it's still fresh? It has still not been hit, the naked weekly just above us. So, I mean, gosh, what would be actually really nice is to see some sort of double top in here. Grab the liquidity from yesterday into the naked weekly, the weekly, and the value area high of your previous range. I will actually do this. We'll set an alert there. So this, we'll set an alert. SFP short. We can look for that SFP short. As I said at the beginning, though, with hype, we do really need to watch for the rejection from the golden pocket, our local golden pocket. Your prior highs are going to be right around that local golden pocket. Let's see if there is a naked daily from yesterday in there. Yes. All right. Not from yesterday. It's today's naked daily. But knowing that there is a volume point of control there, even though it's not confirmed, that is the point of control for the day. We really need to be watching that, guys. If we reject 45.52. And one of the reasons I would say that is because it does look a bit impulsive in here. Let's zoom into the 15-minute. The dump down that we're seeing does look a bit impulsive. Actually, this is a 3-wave move, and you cannot start your impulse with a 3-wave move. Because my original thought when we were on the hourly is 1, 2, 3. You know, you could see something like a contracting diagonal. In a contracting diagonal, you still can come up to hit that golden pocket. But this is a 3-wave move down, so that throws that entire thesis out the window. Yeah, that zone, 45.5 to about 46, because the liquidity is resting in there. You have some liquidity before this aggressive dump. Also, what I would say is look at this. This looks like a corrective ascending channel. Right? You have your little ascending channel here. You'd have to zoom in on like the 5-minute and just look at how this is an ascending channel. Your golden pocket is going to be near the highs of the channel. And then if we look at the volume, is volume decreasing? Yeah, volume's decreasing as we're moving up in this channel. Volume is decreasing, so it does look like more corrective move. So between 45.5 and 46, I would really be looking for a potential dump and really just to take out this low. A scalp short opportunity, and then you could leave some to run open until you get down to 41. All right. But I'm not sure what you mean. Did I catch the move on hype? Are you talking about a short? I did not short it because we did not actually hit the naked weekly up here. I remember yesterday I believe we were chopping around. Can't remember exactly where it was, but I did not catch the move, any moves on hype. Okay, let me see. Yeah, you might take that that trade, that short there. Well, we can look as we're coming up there. As we're coming up there, if we do have some local bear divs on like the 12, 15-minute, 5-minute, we can at least look for the short, right? And it just use proper risk management. If you get stopped out, you get stopped out, right? But like, so if, excuse me, if I was going to take the short trade, let's say we're starting to reject from the golden pocket, I'm probably going to get in after we start to lose it. So my stop would go above wherever that rejection high would be. And then you could even put a TP1 at the value area high backtest because there's potential you could drop from there. But TP, a major TP would be that low. And then you could leave some to run open. You would just have to nail the entry because it's all based off your stop loss, right? You'd have to nail the entry. You want to make that stop loss as tight as possible to make this risk to reward ratio worth it because there is the potential you could bounce. In the bullish case scenario, guys, that we'd have to zoom out here onto the 1 hour chart or 2 hour chart. But in the bullish case scenario, that this was just a deviation back inside, but we're going to come up here, we're going to reject, we're going to hold the value area high and then continue. And with us front running a key resistance, it could happen. So even if you're going to take that short, it still could play out just to come down to backtest the value area high. You would just have to, in order to make it worth it, you would have to really nail the entry so you have a proper risk to reward ratio of at 3 to 1 or more. Okay, Aave next. Yes, we'll do Aave for sure. Aave. I can't remember if I use Coinbase or Binance. All right, let's get rid of all this local junk, old junk. Yeah, Aave. So I can see right away we have on Aave, this kind of was an accumulation range down here. You broke out, you had your expansion. Now, in the bullish case scenario, you're seeing a bigger flat correction in here, and then you're going to continue up, right? You're seeing that bigger flat correction. We can look at our targets for that. Between the 1-to-1 and the 1.236, I would be, because we're chopping so much here, we are starting to see that selling exhaustion. We had that quick move down, and now we're starting to channel in here, right? So I get, what I would be focusing on is that channel. And I would really be focusing on 81.61 as well, that 1.236, which is a common target for that rejection on, or for a bounce on ABC correction. Let me go to the weekly real quick. I want to see if that weekly is fresh still. It's old. We can get rid of that. Yeah, and we actually have a weekly support just below us. I don't know if that was hit yet. Let's see. Yeah, it looks like that weekly. We're bouncing from a weekly right now, guys. Or we're trying to bounce from a weekly. You could see it hold its support throughout the weekend. But what we want to focus on is that bigger descending channel. So, and you can see very nicely, we lost the pitchfork. You had the immediate back test, the immediate low time frame back test. You reject, you expect to take out this low. Then we saw a 3-wave corrective move up for a higher time frame back test. You reject, you expect to take out this low. We eventually do. And this being a confirmed 3-wave move, I mean, this being a 3-wave move really told you everything you need to know when you come down here. And I bet you that was right at the 1-to-1 as well, or very close to it if we pull that trend-based Fibonacci extinction. Yeah, right at the 1-to-1. I mean, guys, come on, look at that. Freaking awesome short trade right there, if you would have caught that. But now let's pull that channel, right? So we want to look at the descending channel structure. We're going to go from that high. I'm going to bring it to this lower high right in here, if I can get him. Yeah, and then we're going to bring it down to that big crash low. Midline has been respected historically. A little bit of a deviation. You get above it a bit here. You tried to hold it as support in here. You couldn't. You lost it. Now it acted as resistance. Break above it in the last few days. You could hold this support here, guys. This is a weekly support level and the channel midline. It might just give you a small, move up before eventually breaking down. I don't like how the 1.236 is in the middle of this channel, in the middle of nowhere in this channel. I want to look at, yeah, and we're at the, okay, very, very important. We're at our point of control of our accumulation range. You can see this accumulation range that was from June of 2022 pretty much to August of 2024. So 2 years of accumulation. Your point of control is considered fair value. So when the bulls and the big money was accumulating in that prior bear market, they were, the point of control is the fair value for that accumulation. So if they are still bullish on Aave, they will be willing to buy at the fair value especially of an accumulation zone. And that's exactly where we're at right now. If you look at this POC, right at the POC, we might not have actually touched it yet. Let me try to get it right on there. There we go. So yeah, I mean, like, let's see if we can get another double O in here, but we want to see bull div. So if you're looking at Aave, you are in your zone between the 1-to-1 and the 1.236. You are at your point of control. It might even be a naked monthly point of control. No naked monthlies there, but and we're not going to be able to see if the naked weekly, I doubt it's going to go back that far. Yeah, it doesn't go back that far. Do we have any other confluence in there? Okay, so no monthlies in there. That daily's been tapped. Yeah, I would just be you're at a definitely a support level. It's a weekly level as well as the channel midline. And then also what I would be looking at is pulling a volume profile of this range, right? Of this channel. POC. There's two ways to pull this volume profile because obviously this, let me just delete that real quick. Obviously this move down is impulsive, right? Increasing volume. I bet you if we turn on the volume, it's going to be increasing volume. Yeah, increasing volume on the push to the downside. So generally in a fixed range volume profile, you want to go from the end of the impulse and you want to look at the corrective move afterwards, the volume there. I know some people, you know, Frankie Candles, he would add that in with it, this area, just like I just did. Very good volume profile trader. I like to use it at the end of the impulse so we could go from that low over. It's really not going to change your volume profile very much at all, I bet. Let's just check here. Yeah, you just move the value area high just a little bit. Pretty much the same volume profile. But you can see we're in the zone of support. POC of this range, weekly level, channel midline. I mean, do we have some bull divs on the chart locally? We'd want to see bull divs between these lows and here. Not really on the 4 hour. Not confirmed, but possibly on Market Cipher. Let's go to the 2 hour. No, not really. I mean, you do have some on NAMI regionally, right? You could see regionally money flow is coming out. What could be nice here, actually, what could be nice is you see all this kind of accumulation in here. This was a mini, like, intraday accumulation. And then you had your expansion in here to take out those lows, the liquidity right underneath that. It's internal, but yes, this right here. So, and that would be near the value area low. We can also pull our Fibonacci retracement. Man, actually, we are at good support, guys. We are at good support. Golden pocket, weekly level, POC, channel midline. I just don't see the best confirmation here. If we take out the low from earlier today, this low, SFP that, you might be able to look for a scalp long opportunity on that. We'll set an alert there, actually. But yeah, and then overall, guys, on Aave, the higher time frames, it is looking like it could be towards the end. We're starting to get this corrective grind in here, that selling exhaustion come in. We might make another new low around 81.61 and hit the POC, the actual POC of your last accumulation range. let's do this. I'll set an alert on that POC as well. And we will do, let's see, high time frame, support long. Okay, yeah, I prefer them tight. Me too, Mark. Yes, sir. Yes, sir. All right. Oh, thank you, Mark, for giving me the reminder. Guys, I do want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses just by trading Bitcoin and the altcoins on the USDT futures market on BYDFI. You can earn up to $8,100 in extra Bitcoin or USDT, real paid out. And then they have some of the best initial deposit bonuses in the entire industry. If you deposit $100, you can get a 50% bonus. They're giving 20% deposit bonuses up to $1,000 deposit, and they're giving 10% deposit bonuses up to a $20,000 deposit. So if you deposit 20K, you get $2,000 in a free bonus. You do need to KYC level 1 to get these bonuses, but it is a really good incentive, guys. And BYDFI has some of the best bonuses in the entire industry, like really, really good. I've also partnered with BYDFI to create that Telegram community where when all these alerts that I'm setting during the live streams, all the trades that I'm looking at, I will let you guys know in the Telegram if I decide to take the trade or not. And I also let you guys know in the Telegram throughout the day on Bitcoin, what I'm thinking on Bitcoin. I let you guys know if I enter trades on Bitcoin. If you guys are interested in joining the Telegram, it's free. All you need to do is join BYDFI using my affiliate link and deposit a minimum deposit of $100 into the BYDFI. You can deposit more if you want to get some of the bigger bonuses. But once you've done that, you click the Telegram link in the description of this video, or Mark posted it in the chat here. Thank you for that, Mark. And in that Telegram verify channel, you're going to type in /verify and then your BYDFI user ID. It might be a string of letters and numbers up here for you, but /verify and your user ID, and that'll get you into the Telegram. And once you're in, guys. The money you're depositing into the exchange is your money. We're just having you deposit in hopes that you will try out the exchange, like the exchange. It has really good user interface. It has really good fees on trading fees and everything, and maybe start to use it as one of your primary exchanges. You guys will get the discounts, so I think it's a win-win for everyone. The second partner of the channel is another non-KYC exchange. It is Blowfin, and Blowfin is offering VIP 1 for 30 days. If you deposit just $5, you can get a $10 voucher, and they have some pretty good net deposit bonuses as well. If you deposit $100, you get 20, all the way up to if you deposit $10,000, you can get a $1,000 futures bonus. So pretty good incentives there. And guys, using these affiliate links is a way to say thank you to the channel. It's a way to support the channel. You can also just hit the like button if you want to do that. Share the video, subscribe to the channel, all that good stuff. I do have 2 KYC exchange partners. The 2 KYC exchange partners are MEXC and Bybit. MEXC is offering 10% initial deposit bonus up to $1,000, and the Bybit's offering $30,000 in futures trading bonuses, depending on how much volume you move in the futures markets. And then lastly, the last partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator you see here at the bottom of your screen. I use it for entries on trades, entries and exits. A trade confirmation pretty much. So as we're coming down to a real key level of support, I want to look for, I'm not just going to long it here just because it's support. I want to see if we have the confirmation so that the trade is more probable to play out. And since I've been using NAMI as a confirmation, my profits have gone up quite drastically because it gets you into the trades that are more probable to play out, and it keeps you out of those trades that have a less likelihood of actually playing out the way you want it to. So I partnered with NAMI to get you guys 50% off. If you guys do want to purchase NAMI, click the link in the description, their affiliate link for the website. And when you're checking out on the website, type in Divine50 in the discount code promotion box, and it will get you 50% off. Okay, let's see. I also said I wanted to look at Ethereum. Ethereum is at the bottom of a descending channel. So, and it grabbed liquidity, if I remember right. Get rid of that. Yeah, we have, and I'm just gonna delete this real quick. We have this high that was created, and we kind of been just chopping in a sideways and down range, very slow sideways and down range in here. We did just take out liquidity into that anchor view op. And remember, I told you guys last week I had the alert set on 2218 because it just was likely to me that that was going to get taken out. And your anchored view ops are also in that general area, and then the bottom of the channel is in that general area. One thing I am worried about, though, is if we start to flip these anchored view ops, and these anchored view ops are kind of key anchored view ops from your previous highs of the range and then from that higher low of the range. And you can see how they're kind of coming together here. We were holding it as support, kind of lost it, and now we're back testing right now that low. More importantly, out of the anchored VWAPs, the more important one is this one from this low. Because if we want to maintain our overall trend, and actually this is a really good example of this. Let me go on to the 2-day time frame for Ethereum. These anchored VWAPs are like volume supports, volume-based supports. So we had our major low at 1400 right here, 1400. And an anchored VWAP is kind of like a volume trend support, but it's based off volume. So when you're in an uptrend, you come down, you hit the anchored VWAP. If it holds, you expect new highs. If it holds, you expect new highs. But you see, you come down, you hold it, and then you get the continuation of the trend. It's very, very important not to lose that kind of trend volume support. Once you start to lose it, it acts as resistance, and the trend continues to the downside, right? So we're looking at lower time frames, but we're looking at now that anchored VWAP from our previous higher low in the range. From this low, anchored VWAP. And we are now starting, and this was a pretty, this is like, this low here is equal to Bitcoin's 65K low. Let me just say that. So we had our nice uptrend, bounce, you know, you see you can you bounce from it, you go up, you continue here. Now that we're ranging sideways, it is definitely okay to range sideways at the top of a bigger range, right? You're kind of at the top of a bigger range. If you start to lose that anchored VWAP and flip it to resistance, that's when you could see the much bigger dump to the downside and the overall trend change from a bullish trend to a bigger bearish trend. So we're kind of at a key local support level. We really want to hold this, grabbing liquidity of those range lows and also the bottom of the channel and the anchored VWAPs. This really does need to hold. If it doesn't hold, I would suspect that we are going to see that much bigger drop, and we could drop all the way down to our golden pocket, 2139, 2122. Let me do this. Let's just move that over real quick. We do have a daily level just below us that we haven't hit at, what is that, 2190? I know I got to get rid of this guy. Yeah, 2190 is a new date, 2191, sorry. Actually closer to 2192. And it would be interesting to see if we do kind of continue the chop throughout the weekend at the bottom of the channel, because the bottom of the channel, you oftentimes will kind of form that chop in low volume. So I would like if we could hit that daily. If we reject here right now, I would suspect we're going to come down to hit the daily and see that bounce, potential bounce from the daily. I will set an alert on that daily, and we can see if we get long if divs. Yeah, and we had a naked daily point of control. Obviously, we're hitting it today with the dump that we're seeing today. It looks like very locally, it's almost being flipped into resistance. Not the best thing to see. We did front run the lows of the channel, and over the weekend, I would not be surprised at all if we chop over the weekend like this all the way until you have that alignment. When would that be? That would be Monday morning. But I would say on Ethereum, this does look like a corrective range. This kind of correction in here looks like a corrective range. You are starting to develop some bull divs, not the best yet, and money flow just crossed into the red. And with that money flow crossing into the red, also we're printing hidden bear divs here. Well, I guess those hidden bear divs already played out with a new low today, so they've played out. Let's see if we have any 2-hour bull divs. Yeah, you do. Actually, you have some nice 2-hour bull divs in here. You have bull divs in here and more local bull divs in here. Money flow doesn't look the best. So because money flow doesn't look the best, it is going to overpower those bull divs. But what we're looking for now is we're really looking for a little bit of a range to form in here. And if we can get a couple new lows, we get that kind of selling exhaustion. We have the big move down. And then if we start to get that selling exhaustion in there, that's when we can start to look for those divs to play out. And we want to see money flow starting to curve up. But I really would be paying attention to that daily level. That daily level at 2192 does look like it could give us a nice bounce. Now, if we do bounce from the bottom of the channel, we would have to watch our midline. And let's pull our Fibonacci. Yeah, I guess your 786 is going to be near that midline. If we pull our bigger Fibonacci, it's going to be, man, actually, I'm really surprised yesterday we didn't hit that high into the golden pocket. We were so close to it. If we remember yesterday, we were looking at this golden pocket here with that liquidity right into it at 23.30. We front run that. That would have been really nicer to take and then to get the dump down. As far as our overall Fibonacci's go, and we might make new local lows, so you might need to adjust this Fibonacci a little bit. We'll look at that. We'll pull our volume profile here. We're below the value area low of the volume profile. That is not a good sign. And if we look at our most local Fibonacci retracement from these highs at 23.23 and we bring it down to the lows now, you can see that that golden pocket is going to be at the back test of that value area low, 22.81. If we close the daily candle underneath this value area low, there is a real chance that we could start to break this channel down. What we would like to see is the chop in here. And yes, we'll probably see a daily candle close if we start to chop in here. But if we long that daily, we do need to be aware of a TP at this golden pocket. Because if we reject there, you are going to expect to take out that low. Turning back the dailies on, though, we could get still a nice long opportunity, right? Let's say we come down into that daily, we start to hold it and bounce. Say we enter a little bit late because we're waiting for the actual reaction and we want to see the bull divs on the chart. Your stop, you're going to put below that low and even targeting the back test of that value area low and that golden pocket. And of course, the golden pocket would shift down just a little bit if we make new lows. Let's shift it down to the daily actually right now. So if we shift that golden pocket down to the daily, you can see it's still pretty much going to be at the back test of the value area low. That could be a real nice scalp. And then, of course, you would leave some open because if you break back up inside the volume profile, you actually have a very high chance of going to the value area high at the and the POC, right? POC first, value area high second. So your TP2 would probably be that liquidity right above the POC. And then you could even look at taking out, hitting the daily value area high. By the time we get up there, if we are going to, like, you might see something like this, small rejection, and then it's going to be near the highs of the channel as well. I want to check what Bitcoin's doing real quickly. Are we really going to front run that golden pocket? I don't like how we're starting to see this chop right before it. It's hard to tell how hype will behave because I expected some of its profits to rotate into other shitcoins. Yeah. I mean, it does have actually a lot of liquidity. Hype does, and it's trading pretty technically, but that dump, if we fall back inside that volume profile, I would expect a much bigger dump. I have alerts set on those highs just above yesterday's highs as well. Yeah, thank you, guys, for the comments there. All right. What's going on with Bitcoin? Yeah, so Solidus 220. Bitcoin is losing the value area low of the range of our past kind of what is that, 8 days or so? Or this is a very small range, I'm sorry. It is about 8 days, 8-9 days, 10 days. But you're losing the value area low, so that's not a good sign. We did grab liquidity of Wednesday's lows, and we are still trading within this channel. Very similar to Ethereum, actually, right? I just got to see, do we have a daily level down on Bitcoin as well? Yeah, we do have a daily level just below us that did get front run. Guys, this could be a decent setup too. What I would be looking for here, though, is if we come down, if we do this 3-wave move and then reject the value area low, that could give us our double bottom, and that could be your range for the weekend. This could be like a weekend range that plays out. If we do something like this where we don't hold the golden pocket and we double bottom right away and then start to get back inside of the channel, I would probably look for a long if we have local bull divs. What in that scenario, you're bouncing from the daily level. As soon as we re-enter back in the channel, I would probably enter a long position. You're going to put your stop below that daily, and even just targeting the back test of the value area high, that's a 5-to-1 risk to reward ratio. You would have to be pretty quick on catching it. But that's still another, that's the two options, kind of the two trades that I'm kind of looking at as local scalp trades on Bitcoin. Yeah, guys, please hit the like button. Please subscribe to the channel if you got anything out of this video. Let's go through Ordi real quick. Ordi just above stop loss 4.2. So let's, you're doing a short on Ordi USD T. We are at support. We're kind of at that support level. Naked weekly point of control 786, naked daily point of control, and it is in your zone between the 1-to-1 and the 1.236 for your trend-based Fibonacci extinctions, kind of for that correction move, those targets. Yeah. The two volume profiles, right? We have our much larger volume profile that is after that dump in October. So taking all the price action from that dump in October on, you can kind of see it's a sideways range in here. But more locally, we want to be focused on this price action in here. So we were looking at it. You are losing the POC of the range, which either range, right? You're losing the POC. That's not the best. But we are in the target zone. If this is going to be a 3-wave corrective move, you're in the target zone to hold support and come, probably take out these highs. Yeah, we do have potential for bear or bull divs, but they're not confirmed yet. And money flow on Market Cipher doesn't look the best, and it's starting to go back into the red on NAMI, but you have potential for bull divs. Let's see if we have 2-hour. 2-hour bull divs confirmed, but once again, money flow leaving on NAMI, money flow leaving on Market Cipher. What I would be watching very locally is it almost looks like we're trying to like flip this support into resistance. So the next level down is actually really nice as well. You have two liquidity levels that were very close to each other at the value area low. And that's also your 1.236 trend-based Fibonacci extinction. I would be looking for that SFP. We'll look for the SFP long. If we get that SFP, that could be a decent trade right there. Even to just bring back up to the POC, because you do have some bull divs that are forming. And on the 1-hour chart, you can see that NAMI, which is quicker with money flow than Market Cipher, NAMI is curving back to the upside on the 1 hour. You have regional bull divs and very local bull divs here. And you could even put in a third drive. Like if we do something like this and come down here, you would see you have 1, 2, 3 lows, and you would have 1, 2, potentially 3 here for the bull div. So I set an alert there. If we get that confirm swing failure pattern, so I want to pierce below it, and as soon as we start to reclaim it, you can enter the long position, and that reclaim stop goes below the low, and I would be targeting the POCs at just for your first TP, a TP1. That's still a decent risk to reward ratio trade there. In the more bearish scenario, you're probably going to continue straight down here through, you know, this being a wave 1, wave 2, and then this is going to continue in a wave 3. And if we look at adding on that 1.618, it's going to be near your bigger value area low. So that would be the next big support, where you would expect a bounce here, but it would be a bounce to create a lower high, right? Because you'd be expecting this 1, 2, 3, and then you'd get a 4, and actually your 4 would probably, we could actually pull a fib for that. And I'm just going to throw it in the random area. Yeah, at the POC, you know, so you get the bounce from 373, you come up to 457. I would be looking for a long in this zone to come up to POC, right? That would be a good little day trade long position. It would take probably a few weeks to play out, or maybe a week or so. But then as soon as we get up to that POC, I would be looking for the short from the POC to take down and take out that low, wherever that low is going to be, and maybe even a little bit further, right? Two decent trades there. If you remind me on that, Zane, if in the live streams, keep reminding me to look at Ordy, we can look at those. And I did set an alert on the SFP at 412. Okay, wait, you said, can I move my stop loss to $4 for the time being in my trade? Well, first of all, you should have already calculated your position size based off your stop loss. So you're saying, can I move it to $4? Let's say you hit this naked weekly at 433 and you're looking for the long from there. You should have already had a stop loss calculated. So let's say you're looking for the long from here. Your stop loss you put below the value area low. And you're looking because you're looking for a big bounce to take out, let's just say this lower high right now and come to the top of the channel. That's a nice risk to reward ratio, but you're calculating your position size based off this number. So what we do as traders is, let me get my calculator, and I'm just going to use an example of this. And Zane, I might be a little bit constructive on you here, but this is imperative to know. So I'm going to say you have a $1,000 portfolio and you're risking 1% in this trade. So 1% of $1,000 is $10. So that's what we're risking per trade. If you get stopped out, you're going to lose $10. We are now going to divide $10 divided by this percentage, but we're going to move the decimal over. So it's going to be 0.05517. You can use $181. That's your position size. And if you get stopped out, you're only going to lose $10. So now you already have the trade calculated, right? Your stop loss was already set where it was. Did you say 4.2? Let's see, 4.2. Okay, I'll actually put it to 4.2. Let's go to 4.2. Now I'll calculate that position size for you. And I'm just going based off $1,000 count. I know it's probably not exactly $1,000 count, but that means you do $10 divided by 0.03047. You can have about $328 on that trade, or about a third of your portfolio on that trade. And if you get stopped out, you're only going to lose 1%. But now you're saying, can I move my stop loss down to $4? Well, that means that you're risking way more than 1% now because your stop loss is literally double. So you're risking 2% now on that trade, 2% or more. Once you have you calculate your position size based off of that stop loss. So if you are right now asking to move your stop loss, that means you probably didn't calculate your position size. You probably just entered with a random amount there, and now that's why you're wanting to lower it. It's improper to do, and in the long term, that can cause a lot of mistakes, like portfolio ruining mistakes. So I'm sorry to be hard on you there, but to answer your question, can you move your stop loss to $4? I do think that 412 is a good support level. At $4, it is below that value area low. You got to be careful with the wick. Like, say we do something like this and we come down and we wick below, but the wick is going to be a pretty aggressive wick below. It could wick to $4 and then reclaim and get back inside. You are setting up for some bull divs. I don't know, where is your entry on it? Let me ask you that. Where is your entry? And depending on that entry, well, entry doesn't matter, but yeah, 412 could hold this support. You are at support right now. You're at support 1, and then you have a support 2 in here. You are setting up for some bull divs. Locally, the money flow looks like we might come down to 412 and the value area low of the range. I personally, if I was in a trade, you said it's at 420 now. If you moved it down to 412, you would be safer for not getting stopped out, but it wouldn't guarantee it. But also, that means you're risking more than you intended to, right? But I do think you are starting to set up for some nice bull divs and a bounce. So maybe, like if I was in that situation, let's say I'm long from like up here, my stop was originally at 420. You're risking, you know what, 5%. I would be moving it down. You're now almost double what you were originally risking, but it would be safer, instead of moving it to 420, it would be safer to move it under 412, maybe like 410. So I hope that helps a little bit. And by the way, none of this is financial advice. It's just kind of advice on or teachings, education on stop losses and how you would do that, and just using this specific case. All right. Yeah, I am excited about this. Solid Us trading for me is really fun, and it's a mind thing too, right? It's a psychology. It's great. No, it wasn't the Lambo. It was the truck. I actually like the trucks better than the Lambos, though. So I'm sad about that. Paper beats rock. Much love to you, my friend. It's good to see you in here. Do you use 5x or 10x leverage? My leverage, I generally put it, I think on BYDFI, I keep it at 8x. Because, guys, leverage, by the way, leverage is not, it's a tool to free up margin, right? And the only time you actually should need to use leverage in your account is if your stop loss is lower than 1%, right? Because, like, let's say you're risking, I'm just going to put this at like 0.5, right? Let's say you're risking, and this is just a random area, right? Say you're risking 1% per trade. If you go in with 1x leverage, let me try to find a good example of this. Let's go to Bitcoin, because we can check Bitcoin at the same time. Perfect. We got a really close stop loss here. Okay, so let's say we're going to long this golden pocket, right? We're going to come down here. We're going to bounce from the golden pocket. As soon as we reclaim that low, we're going to enter long. So that's our stop loss, is 0.09%. Okay, and I'm just going to say I have a $1,000 portfolio. I'm risking 1%. So I'm risking $10 on the trade. You're risking $10 on the trade. Now you can divide that by this number, but you have to move the decimal over 2 times. So 0.00095. I can actually put on $10,526 into this trade And if I get stopped out, I'm only going to lose $10. Let me make sure I did that right. So yeah, 3 zeros. Yep. So I can actually put $10,500 into this trade. And if I get stopped out, I'm only going to lose $10. But you just said, wait a second, Divine Hood. Mark, I love that comment. I'm sorry, guys. I just saw him say that. That's awesome, Mark. Man, I love trucks. I know. It tells you something about. Oh, God, that's hilarious. I have a car too, though. So, all right. Sorry, that threw me off, guys. That was funny. I can risk $10,526 on this trade. And if I get stopped out, I'm only going to lose $10. But you said, wait a second, Divine Hood, you just told me that you only have a $1,000 account. How are you going to put $10,000 on the trade? That is where leverage comes into play, right? So now I can crank my leverage up to 11x. Now I'm going to have $11,000 in my account. $1,000 is my money. $10,000 I'm borrowing from the exchange. That is when leverage comes into play. But let's say this. Let's say that we are looking at a different trade. And this, I'm not actually looking at this trade, but let's just say, shoot, how would I do this? Let's see. Let's say I'm going to long the daily and my stop loss is going to go. This is not a real trade, by the way, so don't think that. My stop loss is going to go below this wick, right? This liquidity trail. And actually, I would say, I want to make my stop loss a little bit bigger. Where's that golden pocket at? Oh, it is there. Okay, yeah. Let's say I want to put my stop loss below the golden pocket, a little bit below the golden pocket, because we might bounce from the golden pocket. We might grab that liquidity. But I want to get in at the daily and this is never a trade I would take, guys. I would never take this trade. But I'm also targeting, with this trade, I'm also targeting, I got to get in here and get on this thing. I'm also targeting to take out the highs at 82.5. So my risk to reward ratio is worth it, right? Now your stop loss is 1.38%. So let's say I'm risking that same $10. I divide it by 1.38%. You move this decimal over 2, so 0.01383%. I can put $723 on the trade, and if I get stopped out, I'm only going to lose that $10. And then you say, wait a second, now I don't even need to use any leverage at all. I have $1,000 in my account, so I can take 723 out of 1,000, and I can use it in my account to make that trade. I don't even need to use leverage. But if you have 700 and 3/4 of your portfolio tied up in one trade, you only have a little bit left for another trade. So that's why sometimes people will just put their leverage at 10x so that they have enough liquidity or enough margin in their portfolio to enter multiple trades. And that's why I usually keep mine at, I think on BYDFI it's at 8x. I keep my leverage at 8x, but my leverage is never depending. It's always depending on my position size is always depending on the stop loss, not on the leverage. Leverage should not matter to you. It should be about your stop loss percentage. That's my rant for the day there. Sui, yes, I'm sorry, Sui. I do want to go over Sui. Sui actually is at a very key level right now. So we are coming down to your prior highs of the range. You can see these prior range highs. Now, Sui did hit the golden pocket, guys. We're at the golden pocket right now. If we pull a golden pocket from the value area low bounce, and I'll fix that, up to our highs, you can see we're at the golden pocket. So we're at the golden pocket, which is also your prior highs. This is a level we would expect to bounce. It's also near the bottom of our big descending channel. Now, because we've hit this golden pocket, it hasn't validated the bigger impulse. The bigger impulse of a wave 1, 2, 3. You cannot say 4, 5 anymore because we hit the golden pocket of your wave 3. Unfortunately, that's bad news, but we did surpass the 1.618 trend-based Fibonacci extinction here. So it does make it still probable that we could still be in an impulse. But now what we would have to say is this is a 1, 2, 1, 2, and then you're going to see your big explosion in a 3. It's not the best because your secondary 1 and 2 is larger than your primary 1, 2. Very, very rarely does a 3-wave corrective move surpass the 1.618. It does happen, but it's very rare. The big thing is, where did we reject on SUI, guys? It was the nicest rejection, golden pocket. And it was, let me just hide this channel for a second. Golden pocket rejection. Pulled from our last bearish backtest high of the value area low. That's your upper range, right? We have our upper range and we have our lower range here. I'll go to the daily. What is going on here? Lower range, upper range. You lost the upper range, back tested, rejected, right? So we pulled the golden pocket from that rejection high to that low. Where did we reject, guys? We rejected exactly at the golden pocket. Now, if you want to understand why log scale is so important, click this Fibonacci, go into settings, turn it off log scale. You didn't hit the golden pocket. Where are we rejecting? If you use the proper golden pocket, we are rejecting exactly from that golden pocket. It is a lower high rejection zone in a macro downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows. Where do you expect to reject? At your macro lower high golden pocket. You could see a move down. So unfortunately, and that's why it's important to use log scale, guys. Just wanted to show you that. Unfortunately, there is a real opportunity that this is a corrective move in here and we could make new lows. It did surpass the 1.618, but we are now invalidating this being a 1, 2, 3, 4, 5 and continuing higher. It could still be a double 1, 2, 1, 2, 1, 2, and then you go. We're at support. You're at your previous range highs in confluence with the golden pocket. If you lose this support level, you're pretty much going to come down to your value area high. Like there's no other way to put it. Let me actually make sure I have this daily level marked out. And the weekly level we will mark out as well. Okay, so no, it's not about the size of the pipe, right? It's about the size of your wallet, right? No, I'm not huge. I'm not, and I'm not talking about my pants either. My portfolio size is nowhere near like some of the big guys in the markets, right? But I'm not also a minnow or a fish or what. I don't know. I'm in the mid zone. Let's say that. Okay, let's go here. So we have our range that we broke out of. I'm just actually going to go to the 4 hour to see it a little bit better. Our smaller accumulation, and guys, this really did look like accumulation here, right? This, I know that we don't have a lower 2 in here, but this looked like a pretty nice accumulation range, and then you get your expansion. Now, after rejecting from a macro resistance, one of two things we're looking for. We're looking for a bounce from the prior range highs, or we're looking from a bounce from the value area high. If you bounce from either of these, there is real potential to continue the uptrend. If we fall back inside this volume profile, I honestly would be expecting to take out the overall low. Not right away, but you would take it out. You can see that our daily level is relatively close. Well, this is the zone. It's a big zone, but value area high, daily, point of control. You also have liquidity in there, a liquidity level. We can look at our naked weekly points of controls. You can see we have a naked weekly. Let me zoom in on the 1 hour and see if it changes that. Okay, naked weekly there from last week. We'll look at our naked daily points of controls. Man, that naked daily right below us is, I don't, we could see a wick through the golden pocket to hit that naked daily, unfortunately. But the bigger, much bigger support level is coming down to this green box here, from 99 cents to about 95 cents. Sorry, 99 to 95 cents. Big support level. The second support level, we're pretty much at it right now. Your prior highs and your golden pocket. The dump down, it looks pretty, I mean, we are in a channel. It's a very steep channel, but we're in this channel. We had the initial dump down, and then we started this grindy channel. You can see we're trying to get back inside the channel right now and backtest it. You get back inside. If you backtest here and hold, you might be able to at least move up to the midline, which is where your VWAP is going to be. But overall, I mean, could we say this is a wave 1, wave 2, and all of this is a wave 3, and we're just going to get a wave 4 before seeing another new low? That's my concern here. If we pull our trend-based Fibonacci extinction, where are we bouncing? Exactly. Where are we bouncing? Right at the 1.618. In an extreme scenario, you do have a correction that moves down to the 1.618. It is far less likely because it's more likely this is an impulse, and we're going to bounce here for a wave 4 before seeing another new low. So knowing that, we can actually look at a short on our wave 4 highs. We can pull a Fibonacci retracement from the highs of wave 3 to the lows of wave 3. We're going to put on our wave 4 targets, and we're going to be looking for shorts in this zone between the 382 and the 0.5. I right away like how your prior support level, your prior, like, you can see this is kind of support in here, is going to be in that zone. So it would now be flipped to resistance for a new low. We can look at our naked dailies again. Do we have a naked daily in this zone? We don't. Do we? Okay, no. We do have some pretty high volume nodes in here, though. And yeah, it's just straight red down. I mean, we're filling in the fair value gap also, guys. This created this big daily candle right here. Created, God, that was horrible. It created a really big fair value gap. From that wick high, pretty much up, was a big fair value gap. So now we've filled that fair value gap on the daily. It sucks that now that we've hit the golden pocket here, it's now invalidated this is a wave 4 before seeing a wave 5. We're also hitting the 1.618 on the downtrend, meaning it's more likely we're starting an impulse to the downside. And in that case, you probably are going to come down to backtest your value area high. And actually, let me do this on the 1 hour chart. I do want to check this, and I'm the reason why, like Montez D asked earlier, I'm thinking about putting this on log scale here. Yeah, it doesn't shift it very much. I actually am going to use the log scale targets. And if we pull a Fibonacci from the overall highs, to the lows right now, your 382 is a common spot to reject. In a strong trend, right? In a strong trend, the 382 is a common spot to reject. So very nice confluence for that 0.5 Fibonacci around 120. This could be a very nice short in this area. So we'll do this. Short wave 5. You could be looking for the short if you want to be very cautious, you could put your stops above those highs because that would be a bullish break in market structure. And we would at least be targeting the lows, a new low, but we could also pull once we get our wave 4, we could pull and get our wave 5 targets. So you'd be looking probably overall at that, something like that. Now, and on the other hand, guys, you're at support right now. You're at a golden pocket. You're at your prior highs. You're at your 1.618. If you wanted to, you could even try to ride. It's a little bit dangerous because the trend and I don't know, we don't really see proper confirmation here to enter, but we could be looking at, even if you kind of double bottom here, you could look for a long to bring up to one of these levels. Because it is a big support level. It's a golden pocket. It's a 1.618. It's your prior highs. And let's look at the 15-minute. Do we even see, we didn't even really have nice 15-minute confirmation. I mean, very local 15-minute confirmation on NAMI, but I don't think it looks good enough. You are getting back inside the channel. Let's pull our Fibonacci from the lows to the highs on the very low time frame. Look at our low time frame golden pocket. Yeah, you could even see something like this, and then this could be the start of a bigger sideways correction that ends up playing out in a wave 4. I personally would not long the golden pocket yet. We don't have proper confirmation. Another thing we can do is we can look at setting alert on the lows here. And if we get the SFP of those lows throughout the weekend, we can look for the long because we are now kind of expecting a move up. So I have those alerts set, guys. We will pay attention to that. Okay, let's see let's check Bitcoin real quick. Yeah, I do not like how Bitcoin's starting to see this little chop before this golden pocket. I was really hoping we would get that nice move down. I guess I'll stay on for another 30 minutes or so, but if we get it during the stream, we can attempt it. Man, let's see here. We'd have to go on real low time frames, and you'd want to see bull divs in this move down. So as you're coming lower low, lower high, lower low, lower high, lower low, you'd want to see bull divs in here. And right now, anyways, NAMI is not even showing them on the 5-minute. Market ciphers potentially, well, we haven't taken out the low yet, so yeah, not confirmation yet. And the fact that this is grindy here right before that golden pocket usually means you bust straight through it. Start small, $5. Yeah, $5. Man, here's the thing, guys. If you're trading, if you're just starting out trading, if you can't turn $1,000 into $10,000, then what makes you think you demand? Sorry, I was reading it. Mark's comment. What makes you think you can turn 10,000 into 100,000? Right. So you want to start small. I do. A lot of people recommend you start demo trading. I actually don't recommend that because when you're demo trading, you don't have your emotion and psychology involved, and you kind of will take risks that you normally wouldn't. What I recommend if you're starting out trading, start with an amount of money that will keep you emotionally invested, but it won't ruin you if you get wrecked. Like, so let's say $1,000 is a lot of money to you, and like maybe that's your rent for the week or for the month, or maybe a car payment for a month or something like that. And it would suck to lose it. It would hurt you, but it wouldn't kill you. I would say start with $1,000 or even $500. Start with $500 in your account and try to get the process down. Because if you can't build 500 into 1,000, then you have to learn the process. The process is what's important. Once you learn the process of being consistently profitable, then you can scale up. But if you have $500 in an account it's going to suck to lose it. You're going to say, gosh, I just lost a whole car payment, or gosh, I just lost half my rent, or whatever. I know rent's a lot more expensive than that, but I'm just giving an example. And it'll give you real emotions to trade with. Your real emotions will be involved. And so you'll generally have a better experience of actually what real trading would be like for you. And then you just work on getting the process down. Once the process is down, if you are able to be consistently profitable and turn that 500 into like $1,000 in a few months, then you can scale up, but get the process down first. Sorry, I'm late to the party. What's the outlook for Solana? Mark, you're funny. Mark's awesome. Solana is unfortunately falling back inside of our volume profile, bearishly back testing our volume profile and rejecting. So yesterday we talked about how Solana grabbed the liquidity from the range highs. It was also our 1-to-1 trend-based Fibonacci extinction, and it was also our, I'm going to delete this now. I'll keep that there. And it's also, I'm sorry, pitchfork band, 1-to-1 trend-based Fibonacci extinction, and the range highs. We wanted to see a move down to backtest value area high, and then we wanted to see an impulse up. If that was the case, you were likely to continue moving higher and taking out the high from Monday, May 11th, right? This Monday. But we moved down. We saw a 3-wave corrective move up yesterday, and now we're continuing the impulse down. We're falling back inside the volume profile. That's a very bad sign, a very bearish sign. Not only have we fallen back inside with a nice volume imbalance candle, you can see this big kind of volume imbalance candle, but now we're back testing the value area high and we're rejecting. Because we're back testing and rejecting, at the very least, we expect to take out the low from today. We are at support, or pretty much at support. Right below us, we have the daily level in confluence with our golden pocket and all this liquidity, all of this liquidity in here. So for me personally, I'm not looking so much to long the daily, but I would be looking to long the SFP of 87.47 into your golden pocket. I will put that as an alert right now, and if I take that, I will let you guys know in the Telegram. But we have to be careful, and we have to nail this, right? So if we come down, we SFP into the golden pocket, we reclaim, we can look for the long. We have to have we have to catch it pretty quickly. Like maybe we long the reclaim of the 0.618 at 87.8. Our stop is going to go below that low. And then we're going to target the very first TP. You would have to watch for another back test of the value area low. Because if you do something like this, bounce, back test, and reject again, then you would expect to make another new local low. But that is still a decent scalp trade. It is a 3-to-1 risk to reward ratio. Guys, a 3-to-1 risk to reward ratio, with a risk to reward ratio of 3-to-1, you can actually lose 70% of your trades and still be profitable. So, I mean, I would take that trade. And I will take that trade if I have proper confirmation. I will let you guys know. But it looks like we could be setting up for some nice bull divs into the golden pocket. Hopefully by then, money flows curving to the upside. And we can look for that long. On the overall macro bias, it is bad that we're falling back inside this volume profile after taking out the range highs. Ryan Henson, we took out the range highs. We're falling back inside the volume profile. So if this support box doesn't hold, we're pretty much instantly going to move down to 85.5 to $85. If we lose that, you're moving down and you're going to take out this double lows into the value area low, 81.29. And honestly, because this does look like a zigzag correction to take out your range highs, there is the potential this is a 1, 2, 3, 4, 5, where you're going to at least take out these lows, but most likely even take out this low. And remember, we are in a bear market. We're looking for accumulation. Tap 1, if we come down and take this out, tap 2, you now get a move all the way back up towards the range highs, or at least towards the golden pocket. And then you get another move down towards the golden pocket. Tap 3, that's your accumulation zone. And then the new bull market starts maybe October, November, December, something like that. For a while on Bitcoin, my bias on Bitcoin for quite a while has been that we are still in a corrective move. I know some people are even calling for new all-time highs on Bitcoin. It's not an invalid scenario, but it's less likely. Get rid of that. And I've been looking at this whole move up, this whole 3-month long range, 3-4 month long range, as an ABC correction where we could reject from 82 or 87. 86, 87. And overall, after you finish an ABC, you're looking for the impulse to continue to the downside. I get that we do have weekly green dot on Market Cipher, and historically that has marked the bottom. We did not have bull divs. We did on NAMI, but Market Cipher has never. You usually have bull divs at the end of bear markets, right? At the end of bear markets, you have bull divs on the chart. I guess in here you didn't. Actually, you couldn't. The question is this the overall high at 82.8 and we're about to nuke right now? Or is it more probable that we form a range around this resistance zone and potentially even make one more local high within the range before seeing that bigger dump? And that local high could even bring you all the way up to 87, 86, 87, right? And then you come all the way down and then you form this bigger sideways range in here and then eventually lose it. Yeah, risk management for sure. Paper beats rock. I think risk management is probably the number one thing in trading. It really is. I completely stopped trading for 5 months after a big loss. Well, no, I'm sorry to hear that. What I will say is I'm glad that you're back and you learned a pretty intense lesson. Wait, I lost 120K, damn, because of FOMO and over leverage. So I want to reprogram myself to start smallish just to build confidence. That is the perfect plan. No. And I'm sorry that you lost so much money and it was such a hard lesson for you. But now you understand why what leverage is not used for. Leverage is not used for, oh, I only have $1,000 in my account, but I want to make $1,000 today. So I'm going to put my leverage up to 25x and I'm just going to long my entire account. That is not how to use leverage. You could be one of the best technical analysis traders. You can nail 80% of your trades and you make a bunch of money. Actually, one of my main mentors, he has a YouTube channel, Bitcoin Hyper. He was one of my main mentors back in the day. He told me a story of how he won 46 trades in a row. And he's really good at technical analysis. He won 46 trades in a row, and he wasn't using proper risk management, so he was risking too much. And on that 47th trade, of course, he had won 46 in a row. He's cocky as hell. He risked like 50% of his portfolio in one trade, and that one trade lost, and he all the months and months and months of work he spent building, winning 46 trades in a row, all wiped out in one trade because he was overusing, he wasn't using risk management. He was over positioning his trades. And so it's really important to understand risk management, man. And trust me, I have learned that the hard way too. I've wiped out, I'm not special in any ways. I have wiped out many accounts, liquidated many accounts because I learned I would, over leverage and just in some ways even just get FOMO and stuff like that. So it is something, it's a process to learn, and it does take discipline, and it does take being brutally honest with yourself. You will lose trades, guys. It's trading is based off probability, but there's no certainty in trading. So especially if you're an aggressive trader and you're trying to catch SFPs, or you're trying to catch, get a tight stop loss, there will be trades you will lose. It's just the way it is. And that's why you need to use that proper risk management, because if you lose, you're going to lose 1, 2, 3%. But on the wins, you can win, 3, 5, 7% or even higher. So once again, risk to reward ratio, guys. This is so important, risk management. And honestly, you could even lose half your trades. And if even you're taking a 1 to 2 risk to reward ratio, you'll still be profitable. But you have to make sure you're calculating your stop loss ahead of time, and you're building that, you're entering with the position size that's required for that stop loss. Over 9 billion wiped out from the U.S. stock market today. Wow. Okay. How is the S&P doing? Wow, that's a pretty big daily bearish engulfing candle. Pretty big bearish engulfing candle. Overall, guys, though, I think the stock market could make it up to 7,700, 7,800. But that is a pretty bad sign. So maybe we're going to see something like this first. A dump all the way back down to 72, and then a move up to 77, 78. I mean, let's be real. This is a very aggressive trend. It can't continue. Well, it can, but it's very unlikely to. Even for the S&P, even for the S&P that goes, it's very unlikely to continue. Now, could we see that very aggressive trend and then it start to kind of chop for a bit? Yeah, so we could start to see some chop in here. I'm just worried about, we saw this on the S&P, multiple drives of bear div on the daily time frame, all the way going back to July. And then money flow was draining out. As soon as you cross into the red, that's when you get your dump. Well, again, now we don't have, we have very slight bear divs on Market Cipher. And your money flow is starting to roll over, and you can see bear divs on NAMI, but more importantly on NAMI is you have money flow bear divs. So if the traditional markets start to roll over, guys, man, once again, let me go back to USDT dominance. Once again, guys, we're at major support. We're in an impulse to the upside, and we have highs, double top highs that we need to take out. I really do think that we could be about to see a giant dump in the crypto market in the next coming months. It sucks. I'm in spot 2. As traders, we can play longs, shorts, all that stuff. Yeah, awesome, Mark. I know Mark knows everyone in the crypto YouTube space. Mark, you've been around for a long time, because I remember watching you, well, with Jason Casper for quite a while, but also I think Andy from Bitcoin Consensus. I know you've been watching him for quite a while. And Coons, I know you're with Coons. I know you're with a lot of the crypto traders. And I bet you Mark is a very good trader, because Mark is constantly in live streams from different traders who have different techniques and different strategies. And Mark is just absorbing all of that information all the time and taking what works for him and leaving what doesn't. So I guarantee you, Mark's probably, I think you're in Italy right now. He's probably on some private jet or something like that. Andy, since day one, dude, that's really awesome. That's really awesome. I think you've been pretty much with me since day one as well. I think I was streaming for 2 weeks when you popped into the chat, and I was really happy and surprised when I saw you pop in. I was like, wow, okay, maybe I've made it as a YouTuber because Mark is in my comments. Yeah, awesome, man. Well, thank you, Mark. I appreciate that comment, dude. I know that I'm definitely not the best technical trader or analyst. I do have something to provide, right? And I'm really good with pitchforks. Jason Casper was the one who I've been in his Discord, I think since 2019. And Jason was the one who actually encouraged me to start. Close to Pisa. Wow. Okay. Hope the travel's going well for you, man. All right, let me read what Christoffel said. The thing is, risk reward of 1 to 3 or 1 to 2 is when we didn't protect position and do nothing till the end. But mostly people protect position, and that's a 1 to 2 ratio or 1 to 3 ratio become 1 to 1 or less when you stop out. Risk the same. Yeah, I am a big proponent of protecting position. So like when you hit a TP1, let's just say, let's go back to that Bitcoin. Man, this does not look good to me, guys. This chop right before the golden pocket does not look good to me. It still might play out, but it just doesn't look good. But let's say we're taking that long on Bitcoin, right? We're gonna put our stop below the golden pocket, and we're targeting the value area high. But the targeting the value area high. When let's say we come up and we take out those prior highs, and I want to take a TP1 there because I'm not sure if this is going to be a bigger corrective structure, right? I would take a TP1. If we start to SFP these highs, take a TP1. Your VWAP's probably going to be down there as well. And then you move your stop loss to break even. Now, depending on, you take 50% out. Let's say you take 50% out there. That's already now, you've guaranteed made money. It wasn't as much as you were planning, but you guaranteed made money. And then if you move your stop loss to break even, you're risk-free. If you get stopped out, you made 50% of what you originally thought, or a little less than 50% of what you originally thought, but it's still a winner. And protecting position is important because there are times, actually a lot of the times with Andy, DeWalt, and Jason, and myself, we get a TP1 and then we get stopped out. But it still works. It still makes money. So yeah, I think that's important to protect position. Awesome, Mark. Thank you so much, dude. That actually means a lot to me, dude. To be in the top 5 in the crypto space, dude, that actually does mean a whole lot. Especially coming from you, because you're so knowledgeable about all the different traders and their strategies and their analysis. I really do appreciate that, man. Yeah, static attack. I definitely use pitchforks. I've not really seen another trader that uses pitchforks. And I kind of was one of the, I've talked to Coons about this a little bit. I like using let me go to the daily time frame. For pitchforks, I really got a good handle on pitchforks in combination with Elliott waves. And for instance, in this big bull market push up, I was looking at this as a wave 1, wave 2, wave 3, wave 4, wave 5, and then a potential ABC flat, and then you have the next bull market, right? But knowing that your third wave is your most explosive, aggressive move to the upside, and then your fourth wave gets that correction, usually 382s, 0.5. I was looking for the fifth wave targets, and so I pulled that pitchfork, and I learned Bitcoin likes modified skip pitchforks, but I pulled a pitchfork from that wave 3 low. That's your wave 1. So I look at, you can pull a pitchfork from your wave 1 low to your wave 1 high to your wave 2 low, and those pitchforks are often respected very, very much. Respected, drop to the midline, break above it, bounce, get highs. I mean, they're very respected, right? But then if you pull a pitchfork from your wave 3, you can often find your wave 5 targets. So as we were coming up to 108, 109K, I was looking for shorts. Everyone else was expecting continuation up to 120 and 140. Also, when we were coming down to $74,000, I was looking for a little bit lower. I was looking for the golden pocket at 72, but I knew that we could see a bounce at that pitchfork band. And on Bybit, the wick, let me hide this pitchfork here. I'm going to go to the 2-day time frame. The wick on that pitchfork, or on this low here, is a lot less than the wick on Coinbase. So you even pulling the same exact pitchfork here, you can see how Bybit, sorry, I'll go to the 12-hour chart. That 74K low was a very, very important low, was the bottom band. So we were looking for shorts up here because it was the top. That would be a good target. The top of the pitchfork would be a good wave 5 target. And then we had this correction. Once we lost the midline, we were looking for the next major pitchfork support. This band, we started to see bull divs at this band. Okay. And then you break above the midline, you flip it to support locally, you work your way up to the top. You get a $13,000 corrective move from the top or upper band to the midline. Upper band, lose the midline, backtest the midline. That was your big crash in February. You chop in your last range in the band, you lose it, you lose the pitchfork. Now that's a smaller range. This is our last range. But I remember when this range was happening, when this range between 80 and 98 was happening, I kept telling everyone, we've lost the pitchfork. Pay attention to the back test, because if we cannot get back inside of it, I expect a huge drop. And that's exactly what happened. And if you go back and watch my videos from November all the way through January, you'll see that I have this pitchfork in a lot of my videos. So yeah, I kind of learned, I kind of developed that strategy myself with years of playing with pitchforks. And then in Jason's Discord, everyone calls me the channel guy, right? Like, I just love channels and stuff like that. So let me keep that on and hide it. Because we often, the market is a lot of bot trading and stuff like that. So like when you see a, a rising kind of range like this, you can pull it from the low to the higher low to that first dead cat bounce high. And like, hello, like, where did we reject? Right there, Here's another thing too. You see how well they're respected. You break above it, back test support, new high, back test support, new high, back test support, new high. So channels are very, very nice for me. I'm really good at trading channels, even low time frame channels. Yeah, I don't have that yacht money yet. Well, Mark, I have no doubt you'll get there someday, man. Like, no doubt. And I'm sure you could trade a lot more. I don't know if you're like a super low time frame scalp trader and stuff too, or if you just kind of trade a few times a week or a few times a month. But I guarantee you that you know what you're doing, and you're going to build it, right? Because it's compound interest. You'll build it, and then in maybe 5-10 years from now, you'll be hosting some event on your super yacht. If you want a super yacht, if I had enough money for a yacht, I don't even think I would buy one, guys. It's just not my thing. I mean, I would probably rent one and go have fun there. Best yachts are built in the Netherlands. Okay. I forgot where I was going with this. Pitchforks and channels are something that I use a lot with pretty good accuracy. And then, of course, I've never taken a course in my life, guys. I learned from Bitcoin Hyper. He used to stream every single day, and I used to just tune into his streams every single day and soak up what I needed to from him. I then learned from Jason Casper. I went, because Bitcoin Hyper stopped streaming and would maybe only do it once every month or so. And I would go to Jason, and I learned more about CVD divergences and order flow from Jason. And then I learned I like Elliott waves, and I started learning Elliott waves from Coons. And then, of course, Andy and Dewalt are really good at Elliott waves as well. And I take the pieces that I like out of those different teachings, and I kind of made my own Frankenstein strategy with it all. The biggest thing is, no matter what strategy you have, it's about risk management. I also took Frankie Candles is a really good volume profile trader, and I took I think volume is one of the most important things in the market. So, volume profiles work really well. Hosting an event, wet t-shirt contest. Let's go. Heck yeah. Oh man. If it flies or floats or fucks, rent it. Yes. It's sometimes, right? That's so funny, right? You got to rent those Fs. Guys, I also wanted to show you, I forgot about this till just now. So I do like, and this reminded me of it because Bitcoin Hyper uses pivot points, Fibonacci pivot points. And so looking at the monthly Fibonacci pivot points, we did reject from our R2, resistance 2 Fibonacci pivot point, and we've now come down and we're back testing our R1 monthly pivot point as support. If we lose it, that is when we could really see a big dump. Your monthly pivot, your actually pivot is around 74K, 73.8. And then you can also change this. I was looking at the weekly pivot points as well, because our S2 weekly pivot was in a pretty nice zone, that $76,000 zone that the anchored VWAP is at. And you don't want to lose $76,000. Yeah, but that's honestly about it, guys. For Bitcoin on that low time frame, I'm not so much interested now anymore in that golden pocket long. If it happens, shoot, maybe I'll stay on for 10 more minutes. Let's see if we can get this in the next 5-10 minutes. I don't like how this chop was here before, but could we get an SFP of this low into the golden pocket and overall see this as kind of a 3-wave corrective structure up to value area high? We could. It is, depending on how you get in here, it could be a very nice scalp, worth it, right? 11 to 1 risk to reward ratio. But even coming up to take out your prior highs, and that's going to be where your VWAP is going to be. Probably by the time we get up there, your VWAP is going to be in this general zone. That is still even a, 7-8 risk to reward ratio trade. Yeah, thank you, Mark, and thank you for modding and everything. Thank you guys for posting. Guys, if you do want to catch, I set alerts on a lot of things that happen when I'm not streaming or when I'm not making a video, and I do try to keep you guys updated on all of that in the Telegram. If I get an alert that goes off in the Telegram, I will post whether I'm going to enter the trade or not, and I'll let you guys know. So if you want those alerts, then join the Telegram. It's free. All you have to do is join BYDFI using my affiliate link and deposit a minimum deposit of $100 or more. That money's your money. Whatever you deposit in the exchange, you're not giving it to me and you're not giving it to BYDFI. It's your money. We're just having you deposit it on the exchange in hopes that you'll try out the exchange, like the exchange, and start trading on it. You'll get the discounts on the trading fees. If you KYC, you can get the bonuses here. And depending on how much volume you trade on the exchange, you can earn up to $8,100 in extra bonuses. So I think it's a really, really good exchange. It's got really good order books. It's got really good UI, very good customer service. Also, if you ever have a problem with it, you can reach out to me in the Telegram. I will, and also my rep, his name is Alan. He's in there. He's really, really good, really responsive. So if you guys want to join, that's how you can get those signals when I'm not streaming, when I'm not in a video. Not signals. You get those alerts where I'll alert you that, hey, I'm entering the trade or not entering the trade. So, yeah. Yeah, and thank you for posting that in the chat, Mark. Crypto Wandered, thank you. Hope everything goes well to fix the truck. Yes, thank you so much for that, man. It's just a pain in the butt, having stuff like that happen, but it is part of life, luckily no one was hurt, and that's the important part. It's sometimes right. Thank you, man. I love it when all of you guys catch these streams. The streaming with you guys literally does make trading a lot more fun. First of all, like, Mark's one of the funniest guys in the world, and some of you guys are funny. And also we have good ideas that we kind of tell each other. Crypto Clown World comes in with his EMA stuff and his MA stuff, and he lets us know, hey, this looks bullish, and maybe we can use that as well. I'm going to need a bigger truck. Yeah, me too, man. I'm going to need a bigger truck now. All right, we're getting the SFP. Let's see how do we look. We don't really have. We do have bull divs on NAMI, but not completely confirmed yet. 3-minute bull divs potential. I want to go into our order flow. How does our order flow look here? Why is this not? Oof. Guys, I actually think that we could be setting up for some potential bearish CVD divergence. If this starts going up here, this CVD starts going up, and we're making lower highs and higher highs here with an increase in open interest, that could mean a bearish CVD absorption here. It's not confirmed yet. But we sure did see a lot of longs stepping in at the lows today. Look at all these new positions are relatively longs. Yeah, money flow doesn't look like this. We don't even have 1 minute bull divs here, guys. We had some kind of unconfirmed 6 minute bull divs, and we had some kind of unconfirmed 3 minute bull divs. I would at least like to dip into this golden pocket just a little more. Maybe even come for this liquidity right underneath the golden pocket. If we can grab that liquidity right underneath the golden pocket, that would give us the full golden pocket touch, grab the liquidity, and then as soon as you start to get back above the golden pocket, you could enter the long. I do have a lot of stuff to do today too, so like I'm not trying to babysit a trade right now. It's up to you if you guys want to take this. I don't see the best confirmation, but it still could play out. I would definitely be looking for a TP at the highs with the VWAP there if you get the SFP. If you don't get the SFP, just leave it open. But we definitely be looking at like 79.8 or wherever the value area high is. Hold on, let me zoom out to the 15-minute. Yeah, around 79.8 would be a level where I would absolutely TP on that long position. And you could leave some of it open to run just in case you come up to the midline or, you know, up a little bit higher. Yeah, I do want to make some more videos on how to use tools properly. That's actually something that I need to get into. Cybertruck. No, it wasn't a Cybertruck, but maybe if I got a Cybertruck and I got hit, I'd still be, you know, like nothing would have happened. I don't know. If we keep dropping, where do you think we could go in the next 8 to 10 hours? Well, we have that daily that's just below us. So we front ran a daily level of support earlier today. We could make a double bottom into the daily at 78,558. So like something like this, double bottom, grab liquidity from today's low into the daily, and then I would want to get back inside of this channel. And then that might be the bounce level. It would maybe give us the potential, depending on how quick we zoom down here, we could have some bull divs on the chart, multiple drives of bull div. So what I will do also is I already have an alert set on the daily, but I just to be double sure, I'll set an alert on today's low. And if we get that SFP into the daily, that is when we could look for another long position there too. I'll delete this one because we just had that one play out. But yeah, guys, I'm going to take off for the weekend. I got some stuff to do. Look for USDT dominance to move past 7.3. Wait, hold on. And form bear divs. Yeah, USDT dominance is at a nice support level on the higher time frames. It's at that 382 Fibonacci. And to form some bear divs, actually, we're already almost forming some bear divs here. 8 hour. Let's go to the 4 hour. I think the 4 hour probably is starting to form. Yeah, potential, but look at that money flow. Looks really nice. So you can see we are making higher highs in the price action. Potential lower highs, not confirmed yet, but this money flow is going to overpower it. And if this money flow starts to cross into the green on the 4 hour, I think we're going to get a much bigger move to the upside. And that means Bitcoin's going to keep dumping. But I'll let you guys know everything in the Telegram if I get alerts. I do have a dinner planned tonight where if alerts go off during that dinner, I'm not going to answer. Let's just say that. Other than that, I will do my best to keep you guys updated on everything. So thank you guys so much. Appreciate all your kindness. I appreciate the support from you guys. Please like the video, subscribe to the channel, and remember, if you want to join the Telegram, it's there. And I will see you guys when I see you next week. I might or in the Telegram. If you're in the Telegram, I'll see